Good evening, everyone. This is Mr. W. Thank you for joining me. I am the writer of the crypto market updates that are published almost every day, four days a week, and I will be doing what maybe we can call a video crypto market update here every few weeks, just to share my thoughts in real time. And charts and kind of how I'm able to, process price action and the technicals in order to give you the forecast that we've been putting out for the past almost 6 months, I guess it is. So anyway, if you don't know who I am and you haven't seen the interview that I did with Raphael, maybe a week and a half ago, highly recommended. I'm sure we can share a link somewhere in or below this video, so you can get a little background on me and just hear my answers to some of the great questions that he had. Just a little background: I was formerly with Bull Bear Analytics, which was one of the first TA firms in crypto. I've been involved in technical analysis since 2008 and crypto specifically since 2013. And that's kind of when I started marrying the two. And when BBA really kind of came into its own. That company no longer exists. So I'm TCV full-time all the way and been loving it so far. So anyway, let's get to it. I just wanted to start. This might seem a little random at first, as the first one. And there's just some basics that I want to cover first, and then we'll get into some charts. And then next week, maybe we'll just be able to dive right in to the charts, because I know that's what most people really care about. First of all, I'm sharing my screen here, and I just wanted to show my favorite website that I use to monitor price action. Now, I don't do any of my TA. I don't do any of the analysis that goes into the crypto market update, the CMUs, but this is just on a minute-by-minute basis, on a daily basis. I have a crypto watch chart up exactly like this somewhere at all times that I can view, and there's a couple other ones that just free sites that are easy to use, nice visually. They have order book representation here. There's some other functionality that you can add if you want to, like, here's the depth chart. And I believe that Crypto Watch also is a part of Kraken. And so I think you can, if you have a Kraken account, you can put it into Crypto Watch and trade directly from the platform. So I can give you all kinds of alerts, and it'll trade off at different levels and have different triggers and stuff. So, but I don't use it for that. All I use it for is watching the price action. And I'll constantly be just flipping back and forth from these time frames just to get an idea of what price is doing at any given time. And by the way, also I have Heiken Ashi candles on here. So if you come down here, you see just a regular candlesticks, but there's also the Heiken Ashi candles, which I think they're easier for me when I'm just watching price action and in terms of trend following. And so that's what I'm using on here all the time. But that's just a preference. And so then I have MACD, so a volume reading, OBV, which is a kind of a adjusted volume reading, and then just a classic standard RSI. And then these are all different moving exponential and simple moving averages. So anyway, I just this is just a great site to watch price. And the more I look at it, this just looks like a bullish consolidation before we see higher prices, but we'll see. We'll get into that here in a little bit. But first I wanted to get in, before we get into the Bitcoin chart that I use for the CMUs, I wanted to check out, I just went into Google and typed in Bitcoin news. And this has kind of been the theme of the past couple months, if not the summer into this fall, is I've changed my mind. And so, here we see this is an hour ago, Business Insider, top strategist and longtime crypto skeptic explains why he now believes. So let's go ahead and click on that, just see what this guy has to say. Explains why he now believes Bitcoin should be in their portfolio. So Bernstein is a famous and well-respected Wall Street firm, and apparently this guy now thinks that Bitcoin does have a role in asset allocation. So like we've been seeing from, first it was the micro strategies with Michael Saylor and Square allocating some treasury. And then we saw, then we've seen hedge fund guys, and now we're starting to see analysts eat a little bit of crow and start to get a little bit bullish here. Again, we got more just talk of Bitcoin supplanting gold. We're a long way from that. I still like holding a small percentage of gold, but Bitcoin is certainly eating its lunch right now. So I think the main theme continues to be bigger, I would say, institutions and bigger, more respected traders and trading firms start to turn around and recommend to their client, not only put money to work themselves, but recommend to clients that an allocation might not be such a bad idea. And so with that in mind, we've seen Bitcoin surging to new all-time highs, at least on Bitstamp, we've gotten to 19,918 before this recent pullback over the past 24 hours or so. And this chart was in the update, so most of y'all have seen it. I just wanted to point out how important I think this trend line is here over the short term. If we can just consolidate in this area, in this kind of this little wedge right here, for it could do it for a week, and I think that'll actually be healthy to recharge some of these oscillators and get rid of some of these bearish divergences, which you can see here. Let's do this. Just have a trend line on this RSI here, and you see how this is going down here. That's coming down while we made new highs here. So there's definitely some divergences need to be cleaned up. I don't think we can go straight to all-time highs straight away, over the next 24 to 48 hours, but I think it's highly likely maybe over the weekend or coming into next week, if we can just hold this trend line, so right now it's about 17. So we can hold this guy, then I think that'll create a nice little base for, what should be a run up maybe to 21, 22 pretty quick, if that's the way it goes. Now, these divergences are somewhat worrisome, and this, you could have kind of it's not a double top, but it is almost a kind of, at this point, since price is down here, it's like a failed breakout. And so I think there is some downside risk. I definitely wouldn't, if I'm scalping or trying to trade this short term, I probably wouldn't be buying here. But if we can get a washout back down maybe to the low to mid 17s, and then that bounces, and then we hold, through the end of the work week, I think the setup is pretty good for higher prices. So no clear sell signals yet at this point. So I think at this point we just stay neutral, and maybe wait for some dips back below 18 that we can buy, in hopes that trend line holds, and then we get, then we can really actually break 20 for real. 20K for real. If not, if this good thing goes, then we're talking, I don't know if we go all the way back to 12, but I think this 14 to 15 area is certainly doable. Sorry about that. So anyway, let's see. So that's it. And we buy there, like I've been saying. If we can get down to 14 or 15, then we can bounce. Then I think 14, 15 looks good. 12 would be rough. I think we'd need some bad news. There was a rumor maybe a week ago that Secretary Mnuchin, before the administration leaves office, that they're going to enact some kind of spur of the moment strict crypto regulations with regard to self-custody registrations. It sounded bad, and if that something like that actually comes to fruition, that could trigger quite a sell off back to 12K. And like I talked about with Raphael, the other cycles did see a move down into the that kind of move. We saw 17% from top to bottom here. Another 17 takes us down into the about 14. So that's possible, unfortunately. And so we'll see what happens, but I'm hoping, and I think things are looking good that we'll hold this trend line and then we'll continue higher. If not, just get those, be ready to pull the ripcord around 17, wherever this thing breaks, and then catch the dip like this. You want to catch one of these wicks. So anyway, we'll have more later on the week in the updates, but that's that's how Bitcoin's looking right now. Oh, just had the daily candle paint right there. So this kind of nasty looking candle right here is in the books. We got it today, meaning over the next 24 hours from right now, next 24 hours, it's going to be pretty critical to see how this candle forms here. If we get a new lower low below 18.1, which was the local low here, then you're looking at least a retest of the trend line, and then we need to beware. But if this thing can maybe get down into the mid 18s and then bounce back up above 19 and close there tomorrow, well above 19, then I think that this consolidation is going to happen. So anyway, let's move on. Ethereum news, ETH 2.0, the Genesis block called Beacon has been launched. And so now ETH holders of 32 ETH, which is the minimum required amount to stake, can now stake their coins because it's moved to proof of stake. And so this is a great article on CNBC. You probably just look, just Google search Ethereum CNBC, and it'll come up. It has a lot of good information in it. But what I'm interested in is what does this do to price? What has this done? And we can see that it's been a classic buy the rumor, sell the news kind of thing. Wasn't a rumor, but it's kind of a buy the lead up to the event and then sell the event is kind of what that means. And so, this run up in successful launch, it's looking good. People are staking their coins. And so now there's some profit taking after this nice run from the 480s to up to the 600s. I mean, we've been saying buy dips below 500, for even bigger move. And we think that's still the play. I mean, this thing could just chop around in here for a little while before the next move higher. Given these are still a little stretched here, but these momentum oscillators, but volumes look good. Moving averages look good. Market structure looks good. If we can clean up these bearish divergences like I showed on BTC, and just consolidate in this area for a little, maybe even a few weeks going into the holidays, that would be very healthy. And I think it sets it up to, then we get up into that 680, 700 area that we've been targeting in the trade ideas for the past couple of weeks. So not a lot to do here. Again, stay neutral near term because we could just chop around in here, but longer term, buy these dips down into support areas, maybe even below 520, 530, anything below there, just nibble and then wait for this thing to go. So in that article, in the CBC article, there was also mention of DeFi. And since the DeFi report came out, or the watch list that I created came out a few weeks ago, we haven't really talked about them. We're going to start covering them in the updates, but just for this, I wanted to start with showing a couple competitors, the charts that look good that we think have a bright future. And so Yearn.finance Finance has been one of the most widely watched and traded DeFi projects / coins since this thing got going in the spring. And you can see it's been highly volatile, like any new project, as valuation is just starting to take place. But boy, the technicals look really good. We had this massive top coming off the launch, almost a full retracement, just like probably should have in a situation like this, all the way back down into key support. And then you had a nice climb on. Look at all this volume coming in here, all this buying, after the lows put in a higher low here. And then we have this nice kind of V bottom form recently that, could just start going over the next couple of days, or maybe we, consolidate around in here while the other, BTC and ETH, we're expecting them to maybe chop around for a little. Maybe this is the same thing. You put in a little cup and handle here in the high 20s, and then, clear the 61.8 Fibonacci level, and then you're into the 30s, low 30s, easy. If not, probably straight up to the 35 area. And then once you get there, then, I mean, maybe you have another pullback, another higher low, and then you're talking about challenging all-time highs, which would be a very quick cycle. So maybe not expecting, that quick. Some consolidation here, some medium-term consolidation here in the 30s before, maybe late next in the winter 2021 or early spring 2021. That's when this thing really tests and then moves up to all-time highs. Now that would fit with kind of the cyclicality, the seasonality that we've seen in crypto in the previous cycles, over the past eight or so years. So anyway, that's year, we think that this, below 20,000, boy, look at this hammer candle coming out of this demand area right here. That's beautiful stuff, and that tells us that there are people that really want to buy down below 20,000. So do we. And I think even a test of this 50 or this 100 SMA at 21, which will probably be 22, mid 22s. If it were going to get tagged here in the next couple of days, then that would probably be a buying opportunity as well. And then we just hold for a break at these levels here. So that's Urine, and an interesting project to keep an eye on. We're not making any recommendations about where users can get yield, but if you want to do some due diligence, this is an interesting platform to consider. So finally, we'll wrap it up with AAVE, which is similar to, it's kind of a similar platform project to Urine. We can see that when we did our DeFi watch list, this wedge was just forming, and indeed, as suspected, this thing came down even further than we expected, all the way, just, let's see, the low was 50 on the nose. So some whale must have had some big buy order at 50, and it just couldn't clear it, so it bounced off of that level. And so now we've been riding this 100 SMA back up, consolidating over the near term, near resistance above the 50 SMA, which is good, but got to beware of a double top here. This guy right here, and then this guy right here. That could get ugly, and that would get confirmed on a break below 50, which could take us back down to, probably it would be 40. I think that's where you get back in. But if the bulls can defend, I say, even in the mid 50s, then even 60, if we can get some divergences on move back down to here, then that might be intriguing. But as opposed to YFI, which we just looked at, which has a clear kind of base and a new higher low, nice market structure, V bottom, and some upside levels to shoot against from the previous cycle. This one is still exploring these levels from this cycle that's, this kind of first cycle that's going on. And so, this is some dangerous territory here. As RSI rolls over, MACD is about to cross below on the histogram. So just if we can get, again, a week, maybe even less, 5 days of consolidation in these kind of in the 60s and 70s, high 60s, 70s, then that sets the stage for a rally to even higher new all-time highs. But this would be a little more cautious on. So, maybe if price action warrants, we can get active below 60, but I think we wait and see on this one, even though it's interesting. And this is a competitor to in the same field as Urine. And one thing I'll mention fundamentally is that they're both sub-billion-dollar market caps. So even though they're in the 20s, I think in terms of total market cap, on the rankings, they still have some room to go to get anywhere close to the top 10. So anyway, these are two that we wanted to look at, and on that note, I think that might do it. So we'll be doing this I'll be doing this every couple weeks. Hopefully, I'll have some guests on. Love to have Mr. X or maybe some other outside technical analysts or traders that you guys would like to hear from. we can just talk about charts and crypto and news and stuff. And so tune back in. These will be available to subscribers, and I'm excited to continue to do this and just give you some insight into my thought process and some of the tools that I use, and we can learn and be profitable in these markets together. So thank you so much for your time, and we'll see you next time.